Hello and welcome back to Compliance Matters. I'm Robert Johnson from Middlesex Partnership, and today I'm joined again by Jennifer Horsfield, a CCO and compliance expert with a background in leading compliance within international and private banking, as well as consulting for firms in regulatory distress. Hi Jennifer, welcome.
Hi Rob, thank you for having me back.
It's a pleasure to have you back, Jennifer. You've managed a number of 166 and enforcement cases over the years. Can you explain when and why you've become involved in those?
So, to be honest, it can be at different stages of the process. The ideal stage to get someone like myself involved is prior to the Section 166 being scoped by the regulator. However, normally that's not the case. So sometimes it's after a number of previous heads of compliance have left. People get scared by Section 166s and are nervous for their jobs and their reputation. But I think it's important to point out that many of the Section 166s that I have led have not led to enforcement or final notices or any sanctions on the firm. And you can also use them after a remediation program to prove up the operational effectiveness of that program and enable the business to restart. So as long as firms take Section 166s seriously, they can ultimately be a positive action by the regulator for the firm. However, it's not the cheapest way.
So it's not necessarily the end is nigh because a 166 has been triggered, but actually a potential opportunity to get the business running the way it's supposed to be running, I guess, if it's being treated the right way.
Absolutely. As long as you take it seriously and try and use this lever that has been used against the firm by the regulator to do the right thing and help with the maturity, especially in young firms who can struggle to mature their compliance function, especially in the early years. The Section 166 itself can help focus the mind to improve the firm, which will improve its operations in the long run.
And is a Section 166 just an inevitable part of doing regulated business?
I hope not. No, I don't believe it is. I think it is just a tool that the regulator has. And that's why your relationship with the regulator is so important. And also, don't forget, Section 166s come in different shapes and sizes. You can have a non-aggressive one where the firm gets to choose the skilled person and you're fully engaged throughout the process, enabling you to fix things as you go. When the skilled person says you've got a problem here, you can go and fix it. So by the time they finish the Section 166, actually you fixed everything. That is perfect. However, if the regulator has a bad relationship with you or is particularly concerned, they can do a really aggressive Section 166. You'll have had warning signs that this is coming. And if you haven't addressed them properly and interacted with the regulator in an open and cooperative way, they can appoint the skilled person themselves. You have no say. You don't get to see what the skilled person's findings are until the very end of the report. You are not involved in the discussions between the skilled person and the regulator, nor are you involved in the scoping of the Section 166. You also have no control over the costs. Your relationship with your regulator is so important. I think it's also worth pointing out that Section 166s often also apply to non-regulated business. That's firms that are regulated by the regulator, but the actual business activity is unregulated.
So what sort of things are likely to trigger a 166?
Well, as we discussed in our previous conversation, Rob, whistleblowing is seen as a catalyst by most CEOs. However, I don't believe whistleblowing is going to be the only factor. The regulator will also act on communications from overseas regulators, complaints data, poor reporting, concerns from other regulators such as HMRC, FSCS, FOS, and high turnover of SMF staff. These are all little red flags that might add up to the start of an investigation by supervision.
Well, you mentioned the trend of young firms having to carry out remediation programs. Why do you think that is in particular?
I think it's a natural thing. So firms get their licenses, they're young, and they've obviously got to make a return. They're there to make money. And in focusing their energies on return on investments, the maturity and ongoing maturity of compliance and risk functions can get left behind. Also, when you apply for a license, your frameworks that you will have built or possibly have a consultancy build for you are untested. So you don't know whether they're operationally effective at that point. So I think young firms have an ongoing struggle to actually mature their compliance function at the same speed that they're maturing their business function.
So what positives have you seen for firms then following a Section 166?
Well, in many cases, when you have the right people in place early enough and good governance around the Section 166 and any remediation that you need to carry out, it can aid the firm and its governing body to focus on topics that might have historically been kicked down the road or deemed as less important. So the outcomes can be good and positive in the long term. The Section 166 process also helps you engage with the regulator, which again, long term can be positive.
That makes sense. Obviously, building that relationship and building confidence or allowing the regulator to build confidence in your operation is going to be one of the longer term benefits of having gone through that process. What about the impact on a firm that's in enforcement or under regulatory review? Well,
I think it goes without saying, it is generally a very stressful time for the firm, especially the senior management. Information requests can be onerous. A lot of staff won't understand why they are being asked for information because it's not something you would necessarily make public knowledge. And for that reason, I think it's very important that you have an open culture within the firm, that individuals understand that they aren't being asked for information for no reason, but you might not be able to give them the actual reason. So one of the first things I do in a distress situation is address everyone's concerns and create an action plan. So that might be interview training for staff who are undergoing interviews with a skilled person, breaking down the issues that are known or found into a workable and prioritised remediation programme, and ensuring that the correct and appropriate information flows both to the board and, where appropriate, down to the most junior staff. People need to feel comfortable that the situation is being handled and everyone's safe and you're looking after and protecting everyone.
That sounds sensible and obvious in some respects. But my guess is that not everybody does that. Not everybody goes down that route. So what kind of mistakes have you seen being made by firms under regulatory scrutiny?
For overseas firms, they might not have a full view of the group-wide D&O and other insurance policies, which may cover investigations. And D&O insurance obviously is very important for compelled interviews and legal cover. So you need to know, has that been drawn on globally? You need to be getting the right MI from group, and you need to know who to contact in the event that you need to use it. The other issue that I have seen is where firms have used all or most of the skilled person panel for that subject matter, leaving a very limited choice or set of options of skilled persons to use. It is definitely worth firms looking at the skilled person panel for the different areas where they could potentially at some point in the future have a Section 166, and make sure that they are not using all the firms on the panel for each category for other reasons, such as consulting, advisory, audit, etc. So, I mean, that's quite an important one. You want to make sure that you have at least 3 firms that you could choose for a Section 166. The other problem is not documenting regulatory meetings. So when you meet with a regulator, or when you meet with anyone, it's possible for 2 individuals to be in the same meeting and walk out with 2 totally different meetings in their head. I would advise firms, especially firms who are under any sort of regulatory scrutiny, to use a professional minute taker. You might have, that might be your company secretary, or it might be an external professional minute taker to take to any meetings with the regulator. That means that you have documented your understanding of that meeting. Another problem that can lead to problems further down the line is having too many people on projects. So if you have a major project that could be done by 3 to 5 people, say, and you put 45 staff on to get it done quicker, it leads to the risk of not only having to manage 45 staff, which you shouldn't have to, it leads to less documentation of why decisions have been made and how you've analysed pieces of regulation, because you've got too many people on it. So I'd rather a project take a little bit longer, document your rationale for why you've made a specific decision. Take something really simple. So what's your cut-off level for authorisation for your gifts and benefits policy? Is it £30? Is it £250? Is it £750? There isn't a right and wrong answer here, but why have you set it at that level? That needs to be documented.
We've probably all seen examples of this in other walks of life, where you've been into a meeting and come away with a completely different idea about what happened in that meeting to the person that you met with. And also, of course, who hasn't been involved in a situation where too many cooks spoil the broth. I mean, essentially, that's what you're saying there. What goes through my mind is there, or have you seen issues where companies effectively bury their head in the sand, you know, and try to just pretend this isn't really happening while they beaver on with business, hoping it'll just go away?
Yes, I think not only burying their heads in the sand, it's more a case of, but the regulators got it in for us.
Mm.
And actually, I don't believe that's ever been the case. I think that the burying the head in the sand is a human emotion, isn't it? And different people will deal with things in a different way. Some will get angry, some will bury their head in the sand. And it's part of my role in this situation is to provide a little bit of clarity, a way forward.
I guess that's ultimately the benefit of having somebody like you on board is greater experience and understanding of exactly what's going on in regards to how to deal with the regulator and what it is the regulator is seeking to achieve, which might not otherwise be held within the staff of a given business. So bringing you on board, parachuting you in, so to speak, can be the ultimate saving move to keep the operation going and to ensure that they can rectify their relationship with the regulator. So what do you enjoy about doing this kind of work?
It gives firms the kick to actually commit to the required changes, and you've got buy-in. So sometimes the problem in compliance is, you know, things need to be done, but you haven't got the buy-in because the money might be seen better spent increasing business. And I'm not anti-business by any means. For me, the variety, I mean, Section 166 is for prudential reasons, for commercial lending, for financial crime, for asset management. There are so many different areas that the regulator looks at. I think also because there is a real need to make changes and improvements, the speed of that change excites me. And your results are fully evidenceable. So you're only as good as your last job.
Yeah, absolutely. And I guess there's nowhere to hide either, is there? When you're in charge of these sorts of things, you either succeed, get things done, or you fail miserably. And I guess the failing miserably is what's already happened before you're brought on board. So you're kind of there to ensure no more failure. Last question really is, what's your pet hate?
The word ensure. Anyone who's worked with me will know that I ban the word ensure. Now, there's a reason for this. So back in my first senior management function interview, this is back in the old days, I was questioned about a policy for 4 hours. And because I didn't really have an awful lot else, I'd only just started the role to question me about, they focused on the word ensure. And actually, it makes sense. How can this policy ensure compliance with XYZ? It can't. How can compliance ensure that a firm is compliant with the regulations? It can't. It can detect things. It can put controls in place, but it can't ensure. The only person who can ensure that something happens is the person that's doing it. So you won't ever see me put ensure in a policy where it can't actually do what it says on the tin.
Yeah, I can see how that would work. You can give all the advice that you like to a business, or write any policies that you want, but if they don't adhere to the policies, if they don't undertake your advice, you can't stand over them with a ruler, slapping them on the back of the hand every time they go wrong. So to ensure things has to be done by the business rather than within your policies and advice. I get that. Well, it's been fascinating. Thank you, Jennifer. There we have Section 166. If you're having any issues around this, then and you need somebody like Jennifer to come and ensure that you're steered in the right direction, get yourself out of any potential problems, please don't hesitate to get in contact, and we'll be happy to discuss moving forward. This is Robert Johnson. Thank you again, Jennifer. We'll see you again on Middlesex Partnerships Compliance Matters.